The financial markets can be a scary place, and they don't rest for anybody. Our goal here at A1 Trading is to bring you coverage every day, so you can be up to speed on the latest market moves. Before the show begins, remember that trading involves risk, and that anything shared in our content should not be construed as financial advice.
5, 4, 3, 2, 1.
Where does the allocation of funds happen right now?
Go exactly where you want it to go. The next step after that, you'll enter and then it'll go up.
How would you enter, right? What if you're new to order blocks? What if you're nervous, right? Let's say.
Then the correction moves is in the A, B, C move.
Today's stream is made possible by our partners and sponsors. If you're looking for a new broker, trying to get funded, or looking for a trading community to join, consider checking out the links in the description below. By using these links, you'll get access to great products and be supporting the channel. Without further ado, the show is about to begin.
Alrighty, good morning traders and welcome to the A1 trading session here. My name is Gary Fickard. I'm known to many as the FX Big Dog, and we're going to talk about price action and how the markets are reacting right now due to what's going on with Ukraine and Russia. Of course, we know that oil is pushing higher. We've seen oil rise up to levels that we do not want to see it rise up. Clearly, there's a way to be able to combat that rally, and that is, of course, to open up the Keystone Pipeline. Come on, is it just me that's seen that? All right, anyways, let's go ahead and talk about what's going on with the charts. All right, I don't want to get into politics. I don't want to become a politician. No doubt about that. I do not want to be there, but I do want to go ahead and take a look, see what the chart's telling us. And so the charts tells us a story, and we can use that story to make trading decisions. And so we're going to take a look at U.S. oil. We're going to take a look at dollar index. We're going to take a look at gold. I know you're saying, yay, gold. Gold. We're going to take a look at gold. We spoke about 1,939. We spoke about that last week. I had a conversation with Nick. We spoke about oil. I said to Nick that the oil price is going to go up to 1,939. When we hit that level, we're going to see a deep correction. How much more of a correction can we see, or is this just the correction that we've seen so far, and now we're going to see another rally? We'll talk about that in a minute as well. Also, very importantly, and this is the thing that we have to look at the euro crosses. We've seen euro sell-off since the war started. We've seen euro sell-off, and we need to go ahead and look at each euro cross right now to see what is the opportunity. Euro Swiss, euro US dollar, euro CAD, euro pound, all that good stuff. Let's go jump into the euro crosses this morning. That's really going to be the topic of today, is how the euro crosses are featuring, and are we seeing bottoms? Let's jump into the market right now. Good morning, everyone. Hopefully everyone is having a good week so far and good profit so far. Fantastic. Good. We've got a lot of traders out there. Canadian news, 0.5% as expected. Yes, they were raising the rates. You guys are on time. 10 o'clock today, which in the last couple of minutes, we had a rate increase in the for Canadians, and they raised the rates from 0.25 to 0.5%. So 25 basis point raise in the interest rate. Now, I'm looking at the Aussie CAD, and I'm expecting Aussie CAD to go ahead and sell off due to this. We'll take a look at those details as well. So clearly, if you look at US oil, when U.S. oil rallies, we tend to see the Canadian strengthening, all right, because it's correlated. We tend to see the Canadian dollar strengthen, but it hasn't happened. If you look at the commodity pairs like the New Zealand and Aussie, they've actually had more strength against the Canadian, and the Canadian strength has not helped at all. So let's take a look and see if the news announcement has actually helped that, and I'm going to jump into the Euro CAD first. We want to take a look at the Euro crosses. I'm going to jump into the Euro CAD first. Now, before I jump into the Euro CAD, let's take a quick squiz at US oil. And all I'm going to do is, traders, is look at where price at right now. Price jumped to an all-time high rate, or not an all-time high, but we're at 112. All right, we got a little higher than 112.50. That's crazy. All right, that is crazy. So we're up at 112. We are seeing here on the 1 hour, we're seeing a bit of divergence, but I'm going to flip it down to a daily time frame. There it is. So the 1 hour divergence that we've just seen is showing in the daily. Now, this daily candle is still active. which means it can do a lot of stuff during the day. Now, if it closes out like this, we might see a bit of a shooting star, maybe a doji forming right here. That's a good sign that resistance is holding. Where do we get the resistance from? Well, let me go ahead and compress the charts a little bit right here. And you can see I'm actually going to go to a, no, that's good enough. That's good enough right here. Let's go ahead and pull this down. All right, so you see over here, here is a lot of resistance coming off those highs. That happened back in 2011, 2012, and 2013, and then 2014. And you notice it's around about the mid part of the year that the market created these highs in oil. So these highs right here are creating a lot of resistance for the market as the market comes back up to this level. So from a technical perspective, taking all what's going on right now between the war in Ukraine, if we take that out of perspective, we just look at the technicals right now. And again, the reason why I do this, because a lot of traders struggle with this, where they get so consumed by the news that they forget about the technicals. And when I say that, I mean this. When you're looking to do some paper trading, when you're testing out any trading system, and you're running a trading system and you're looking to see how successful the system would be based on the strategy and the inputs that you've put in there, you're not considering fundamentals. You're not considering news coming out for the rate decision. You're not considering any wars. You're not considering anything else but just price action. And it's price action incorporated with your technical or your indicators or whatever you've used to build up that system, right? And so the same thing goes when we trade as technical traders. We should really just look at the charts. Yes, we understand there is a war, and this war on Ukraine is affecting oil prices. Oil prices are shooting up. So we are seeing this. It's clear. It's evident. But let's just focus for a minute now on the technicals right here. And I've always said, I actually had a conversation with Kathy Lean just a couple of days ago, and I mentioned to her, we had a little bit a debate there, and I think it's a debate that should be taken further. But I said to Kathy, you're a fundamental trader and you use technical analysis. What leads? I said to her, you know what I think that leads? Technical leads. And that fundamentals are actually just a fulfillment of what we see in the technicals. That's I believe. Now, everyone's got their own perspective, and that's fine. I appreciate that. But the thing is this. If technicals do lead and they tell us something's going on and that the fundamentals only at a later stage comes into play and fulfills and helps the technicals move to those levels, then we should really pay attention to that. And that's my philosophy, and it's been there for a while, and it's helped me to become a better trader. So when I look over here, I look at oil prices, and I see oil prices testing this level right here. So I'm going to say that there is a lot of resistance here at the top. And I'm expecting that oil should start correcting itself. Now, if I take a look over here, if my technicals serve me correct, then what I would be expecting right here is oil price to drop back down to this level. There it is there. And that price is around $62 a barrel. So we're going to get down to 62. Now, could this mean that President Biden opens up the Keystone Pipeline and put sanctions on the oil Nord Stream 2, and this creates some sort of relief in the price of oil? Could it be OPEC goes ahead and produces more oil, and which they, by the way, they said no at the moment right now, but there's something coming up. There's something in the fundamentals that's going to come up that's going to create a correction in the move. Now, we've seen this in the technicals. We've seen that there's a possibility of price moving lower in oil, but of course, it's got to be supported by fundamentals. What this fundamental is, we don't know. Which direction they go, we don't know. Is it going to be that things ease off in the war between Ukraine and Russia? We don't know, all right? So those are the unknowns, but what we can say for sure right now is that we're due for a correction, all right? And we need to get ready for it. It's like farmers, all right? When farmers go ahead and get ready for the rain, they start planting early. We're going to start planting early, and we're going to start getting ready for the rain. The rain is coming, and this means that we're going to expect some downside move in U.S. oil. Now, we can take U.S. oil and we can move that into different other currency pairs and see how that fits in based on technicals and see, okay, if U.S. oil is going to sell off, how's that going to affect the other currency pairs? We can look at that in a moment, but let's go to Euro US dollar right now. Sorry, Euro Canadian dollar. I said that. So let's go to Euro CAD. So Euro CAD, and again, I'm doing this high level. I'm not going to go into to short-term trading. Like I'm not going to go into like intraday trading right now, at least not those setups. But I'm going to go talk about the Euro US dollar right here. So the Euro US dollar, high level view. If you look at Euro US dollar, we've had this big wedge. It's broken out to the south side of that wedge, and so we've got these swings going down right here. Now let me do some housekeeping here because we've got a lot of stuff here. So let me do some housekeeping here. Housekeeping just means I'm going to clean up my charts, by the way. And it's always good to traders. Look, information is important to pull out information on your chart, but you know, at some point you should clear it up so you can get a little bit of a better perspective of what's going on in the market. All right, so here we go. So if I look at these swings going down from the top here, since we hit the top and we eventually broke out of that range, if I look over here, I'm noticing that the market did go ahead and create this downward swing. So this is what I do. Look here. We had a wave 1, wave 2. Price came down to the 1.618, so that's good. And we're going to call that wave 3. Then we went into a bit of range trading right here. All right. And the market eventually, so this will be wave 1. Let's go market off wave 1, 2, 3, 4 right here. And so this is where we expected the fifth wave to end. Now, because we expected the fifth wave to end right here and price moved down lower and got down to what we call in the 1.618 right here, we're now expecting that price is actually gone ahead and created an inside swing. An inside swing that we need to pay attention to because now we're at a 1.618, which means that we have to go ahead and change things around. So how do we do that? Well, this is now going to be called now my large wave 1. This is my large wave 2 right here. But now I have a wave 1 right here, wave 1, wave 2, and then wave 3 is right here. All right. So why is this important? This is important because now I would be expecting price to go rally back up again to complete this wave 4. And traders, you notice that we did not hit that 1.618 until now. We're now hitting that 1.618. So what is that telling me? It's telling me that we have a broadening formation here. Okay? And with that broadening formation, prices hit the third wave target. And so we're expecting Euro CAD to rally. So do I just jump in? No, I don't just jump in and start buying Euro CAD. I use trading systems, trading methods to be able to enter the market and get in on this trade. So obviously on that confirmation, we now enter. So the most important thing right here is number 1, we got directional buys. We understand where the markets are doing. We understand we've seen patterns, we've seen fibs extensions, we've seen all of this good stuff that's helping us to confirm that we're going to look for a rally in Euro CAD. Now what we do is we now go ahead and use a lower time frame based on our strategies that we use, and we enter the market based on rallies, buying on dips, whatever it is that you use to get into the market. So Euro CAD, I am expecting Euro CAD to start rallying. All right, Euro CAD to start rallying. I am currently in some buys on the Euro CAD. I've got a trade. Let's go take a look right here. Euro CAD. And here is my Telegram channel right here. And if you go to my Telegram channel, you will find, you just got to search it up here. You'll find some buys on the Euro CAD that I'm currently on, or at least in right now. Let's take a look right here. A lot of trades coming through here. So if you want to check this out, check out my YouTube channel, FX Big Dog, and look for my my Telegram channel. And there it is, Euro CAD buy. Okay, so we're buying Euro CAD. All right, so I'm currently right now already starting to commit myself to the Euro CAD based on the strategies I use. So I'm buying Euro CAD at the moment right now, looking for a rally. All right, so I'm definitely buying Euro CAD, looking for a rally. Let's go take a look at some other opportunities. Swiss, Euro Swiss. Let's do some housekeeping. All right, let's do some housekeeping on this as well. So, and it's important to do this. So I'm going to go ahead and clean up all of the stuff right here. Do some housekeeping here. And I'm going to talk you through this. All right, there we go. All right, perfect. Now, if you look at the Euro Swiss right here, you can see that we had a nice, after that flash crash, all these when the Euro unpegged against the Swiss unpegged against the Euro, we had a big flash crash right here, and then of course we had price rallying up, filling that gap. There's a big gap right here. Price fulfilled it, which is pretty cool. And then from the top right here, we started seeing some downward swings. Here is my first swing right here, second swing, third swing. So at the moment right now, I'm at what the 1.27. I think in my last session, if you watch the video and do yourself a favor and do that, because do some fact checking with me. Go back to the video from last week, Wednesday. It was posted on the A1 Trading channel. Check it out. Go review it. We talk about the Euro Swiss, and there was a questions over there. A trader said, "Can Euro Swiss go down to 200?" And I said, yes, it can. And the reason why I've said that, I think it can go even down further, because the reason why is because we have a 127 right here at this price right here, and that price is traded at 240. So 1.0, 240. That's where we're seeing this daily support down here. So can price move down to that level? Yes, it can. And we did confirm that. And we can see right here it's down here. Now, I did say that when we get here, this is what's going to be exciting right now. Now that we've gone ahead and moved down to that level, and I can even confirm this with inside swings. Take a look at these inside swings right here. You can do double confirmation on those. If I go ahead and take a look at these swings right here, look at this. Notice that we have inside here, we have a wave 1, wave 2, wave 3, wave 4, and now we're going down here to the 1.27, priced at around about 170 to 173. So, 1.0, 173. So we've got the market testing that level right here. So what am I expecting in the Euro Swiss? I'm expecting Euro Swiss rally. Are you starting to see a pattern right here? We spoke about the Canadian Swiss. We see it hit bottom, hitting support, showing a nice little broadening formation at the support level. We're looking for bounce. Here we have the Euro Swiss doing the same thing. We have large swings showing us that we're hitting a turning point in the market. We've seen an inside swing, also confirming that we're hitting a turning point in the market. And so we're expecting Euro Swiss to start rallying. Euro Swiss, the upside target on this, the upside target on this is going to be right here at that price level. That price level is going to be at 1.0612. So 1.0612 is where we're expecting price to go ahead and rally, and we're coming off that support right here. We're already seeing a indecision candle right here, a hammer forming on the daily, and we're going to go ahead and mark off right here, buy. So we're looking for buy right here, and we're looking for sell right here at the top. So we're looking for buy here. Let's go ahead and change that color just so we can make sure everyone's got the same thing. Yeah, there we go, buy. So we've got buy here, sell here. So we're looking for price to go back up here. And this, I'm going to mark that off as well. This is what I'd like to call my fourth wave target. If you follow me in my trading, you'll notice that I always talk about the fourth wave target. And so right now, I'm going to be a buyer in Euro Swiss towards my fourth wave target, which is up here. All right, let's make that a little bit bigger. All right, so I'm chasing after a fourth wave target all the way up there at around about 1.0612. All right, 612 is that's the target to the upside. So we got some upside potential. And again, doesn't necessarily mean those traders that say, you know what, big dog, I just need more confirmation. That's fine. Whatever it is that you need in order to make your trading decisions, make sure you follow your trading decision. Remember, I'm not a CTA. I'm not telling you what to do. I'm not advising you. I'm telling you what I'm doing. I'm telling you exactly how I see the market. And whatever you do with that information is purely up to you. All right? Up to you. Completely up to you. So we're going to go ahead and take a look at this right here. Now, And we've got a lot of questions right here. A lot of guys posting things like US dollar CAD, CAD's the JPY. By the way, I do see your comments here. New Zealand CAD as well running. I do see that. I'm definitely going to go ahead and take a look at that as well. Aussie CAD, yep, I see all that stuff. Good stuff. But we're going to cover the euros right now for now. So I'm not ignoring your chat, but I do see that we do have other conversations about other pairs. We are going to jump into that. But let's make sure we go through some couple of the euro crosses here. Now, let me go into one more euro cross, and then we'll go ahead and flip it over to some other crosses as well that is reflecting oil. So let's take a look here. US dollar. This is euro US dollar right here. What do we think euro US dollar is going to do? Well, we've spoken about the other pairs that are expecting rally, and this is no different here on this particular pair as well. If we and again, I'm going to clean up house here so we can get some clean data here. And the reason why you clean up house is because any information that you put on your charts to give you sort of an idea what the market's going to do at that time can change. And when it does, you need to make adjustments. So we're doing that. We're making adjustments here. Okay. So if you look over here, this is no different, right, to what we look at when we look at any other currency pair, and that is, do we see swing action? So take a look right here. Here we have wave 1. Here we have a wave 2. We have a wave 3 down here. We have a wave 4 up here. All right. So wave 5 is indicated all the way down here. So on the euro US dollar, we were expecting price to move down, but this is what's important. All right. So we're expecting euro US dollar to sell off because you still have to get to that fifth wave. So it's not like the euro Swiss, and it's not like the euro CAD, because we have not hit the fifth wave yet. But the thing here is on the euro US dollar is that we're in a fourth wave. And a fourth wave can be a complicated wave, which means we can see a lot of range-bound trading, broad informations. We can see a lot of that stuff taking place, sideways trading because of the fourth wave. It can be very choppy as well. And if I go ahead and zoom in a little closer up right here, you can actually see how choppy it's been. And I'm going to mark off here on my chart. I'm going to mark off this low right here. It's already been marked off. But I'm going to go ahead and mark off that high right there. So we can see that price has bounced off this twice here. Let's go ahead and mark that off there. So we hit resistance there. Okay. I'm going to have to change that color. So we've hit resistance right here. And we've hit support down here. Not once, but a couple of times right here. All right. Go ahead and put it there. There we go. Oops. Are you kidding me? Come on, move. There we go. So we've gone ahead and hit a bit of... That's playing tricks with me, yeah. All right, there we go. So gone ahead and hit support right here. Support down there. You see us bounce off that level there. And now we've broken through. We actually had a good little sign right here. There was a sign here that maybe we're going to see price moving back up here to the top, because we had that bullish candle taking place right there. So it never did, and it broke. Okay, it broke, but it's come down to another level of support right here. Now, if you take a look at the oscillator, we did go into an overbought right here, so I don't look at this as divergence. All right, I don't look at that as divergence because we already came into an overbought condition right here. So these two oversold areas right here don't justify for me, justify as a possibility of divergence here, because we already moved from oversold to overbought, and it's gone back and forth twice. So we're not going to go ahead and pay attention to that. But what I do want to see here is, I do want to see this trend line. This trend line going down from here is being a long-term trend line. And at the moment right now, the market's finding support at the backside of that trend line. So there is a chance, there is this chance that, and again, we may not have it right now, but we're going to keep a very close eye on this. If the market trades back above that 1.1888 level, right? Sorry, 81. So 1.1188. Sorry, my bad. I'm saying the numbers wrong. So 1.1188. So 1.1188. If price trades back above that, we may end up seeing the market go back up here to about 1.1486, around about there. So there is that chance that if we do see some stall here at the backside right here, and we start turning back up again, that we're going to start seeing this sort of action. Now, this is the thing on this. We don't have it. And because we don't have it, we're just not simply going to go ahead and trade that. In fact, if you take a look over here, I have a market prediction for 2022. And so far right now in the sessions that I do, I've really gone ahead and spoken about a couple of things right here. Let's take a look at the Euro US dollar. So Euro US dollar right here is there. You see there it says waiting. So although I'm bearish, now I just spoke about it. I said, yeah, bearish Euro US dollar. The reason why I said bearish is because we're looking for that fifth wave. All right. And the reason why I'm on the sideline right now is because I want confirmation as to whether or not that support's going to hold at that level. And if it does, I might do some counter trading against the overall trend, which means that I'm going to trade it bullish, at least in the midterm. So that doesn't change the whole concept that euro is going to drop further down south. It just means that we might go into a bullish correction first before we start seeing a sell-off. And so that still stays the same. Now, again, I'm on the sideline. I'm waiting for proper confirmation before going ahead and actually trading that. So there will be no trade signals on the Euro US dollar at all inside this Telegram channel because I'm just not on that trade. I'm just not on it yet. I still need to wait for more confirmation on that. All right. Now, let's go ahead and take a look at some setups right here. There was a couple of traders. Now, remember, we're going to focus on oil. All right. We've seen some oil rally, but also at the same time, we've also seen the news come out. They raised the rates 25 basis point to 0.5% for the Canadian dollar. Let's take a look and see what the Canadian dollar is doing. Let's go to CAD. Now, what I am going to do is I'm going to flip this over down to a lower time frame. I'm going to go to 1 hour so we can see what's going on right here, right? So take a look right here. We had a nice little spike down here, and I was placing some trades this morning. Let's take a look and see where my trades are at. These are the trades I pushed this morning. So I'm still short on New Zealand CAD right here, and I was short on Aussie CAD, but it looks like we got that paid off. We are still long on Euro US dollar right here. And that's it. So we've got two trades right here. And by the way, we did place multiple trades. Let's go take a look at our trade history right here. And you'll see here is the trades that we placed this morning, or at least paid out this morning. We got a good buy on the US dollar CAD. We profit on that. We profit on the Aussie CAD sell. We had a New Zealand CAD sell early on, and we profit on that. We just go in again on that. And then we had that was part of the Aussie CAD as well. We also took another Aussie CAD profit as well. So we've placed multiple trades this morning already, and it's paid off. And you can actually follow that also on my other YouTube, on my other Telegram channel right here. And that is, of course, the Traders Network channel right here. And these are the trades that paid off this morning that we've gone ahead and spoken about. So you can see all of this information, every trade, everything I do in my live trading account will be posted in Telegram. So you can follow it so that you can see that this is actually real McCoy stuff. This is not fake stuff at all. All right. So going back to the CAD, the Aussie CAD. What is the Aussie CAD doing at the moment right now? All right. So the Aussie CAD right now is looking for a possible deeper correction move. Let me explain to you why. And I want you to go ahead and take a look at this. I'm going to have to go to 4 hour. Let me see a 4 hour. Yeah. 4 hours should be good enough. All right. Check this out. So check out this 4 hour time frame right here. The reason why I'm thinking Aussie CAD is going to sell off is not because of US oil. It's not because of the Canadian rate decision. It's because of the technicals, and the technicals are telling me this: when we have price creating a wave 1, wave 2, wave 3 up here, so we're going to mark it off wave 1, 2, 3 up here, right? This is 3. If the market struggles to stay above that level, wave 3. If it struggles to stay above wave 3, then we're anticipating that the market's going to correct itself into a deeper correction move, and therefore we will then look for the market to take out the previous low that was created before it rallied up. So here is what we're going to call now the fourth wave right here. But the market is struggling to break through wave 3 high. And so therefore you can see prices starting to trade. Now maybe you have to zoom in a little closer up, and I'll do that in a minute. But you can see prices trading below that. So which means that we're chasing after these lows down here. So let's go ahead and take a look. So this is going to be what we call a deeper fourth wave move. And then we can expect rally. So let me go ahead and just give you guys a little heads up. I'm not saying that Aussie CAD is bearish long term. I'm saying that we're looking for a midterm sell-off on Aussie CAD, and then we're going to start looking to rally. All right, and we are going to look to target, and I'm going to zoom in so you can see a little bit clearer what I was speaking about. So you can see right here, notice right here, notice how the market's struggling. It's come down in below it. It's come back to retest it right here. So we're expecting price to continue to move down to these levels right here. So looking at around about 91.50. All right, so price is going to drop down to about 91.50. That's where we're looking for price to drop down to 91.50, around about there. And again, it could go a little bit lower. And the reason why I say it could go a little bit lower, because price, or at least support and resistance, is not a defined price. It's an area. Let me say that again so everyone understands this. Support and resistance is not a defined price. It's an area. So when I say price is going to drop to 91.50, I'm saying it's going to drop down to that area of support and then turn around and start heading back up north. So what we're going to expect is price to drop down to this area right here. And let me go ahead and just fix my camera there. There we go. Price is going to move down to this area of support right here and then turn around and start going bullish. So keep that in mind. Down here, then start rattling back up again. So am I selling Aussie CAD? Yes, I am. All right. I am bearish on Aussie CAD. Let's go to New Zealand CAD. New Zealand CAD right here. Now, New Zealand CAD looks like it looks like it's sort of the same setup that we have on the Aussie CAD, except it's not, right? So if we go here, and again, always break it down, go to the daily time frame, look at the bigger picture. Okay, if you look at the bigger picture on the New Zealand CAD, what are you seeing? What are you seeing? Hey, let me take my technicals off here. What are you seeing right there? When you look at this right here, you're seeing range-bound trading. Let's just state what it is, right? If you look at the way the markets are setting up right here, you are seeing range-bound trading. Right there, right down here. Now, because we found support right here, all right, and we found resistance up here, it's a no-brainer for us. That means that price should be long-term back up here to the top. So we should be seeing price coming back up here, right? Right or wrong? Right? Okay. So if price is going to come back up here, the only way price can get it back up there if the range holds. If we break out of the range, of course, all bets are off and we're going to be selling off. All right. So if the market does not hold at the support right here, then clearly price is going to go further down south. But as long as it holds here, we're expecting price to go back up. Now, we did have this rally. Price then came back down. So why do we expect that price is going to go back up now? Well, because if you look inside of the swings that we have right here, if you look inside the swings we have right here, we notice that we have multiple inside swings. So we've already gone ahead and done the homework, and we've calculated that we've had a 5-wave structure right here. And with that 5-wave structure, we're now going to take out wave 4 right here. So wave 4 is down here. Price has already gone and taken that wave 4 in a zigzag pattern. This is what we call a B, C move right here. And so this is now our large wave 1. Large wave 1. So because we're in an ABC, this is now going to go chase after our third wave. So we actually are expecting New Zealand CAD to rally. Now that's again looking at the long term. That's the long-term outlook, right? But it doesn't tell us what to do on in the short term, because we've got to move down to a lower time frame to understand what the markets are doing in the short term. And if we're going to do any intraday trading, we have to understand what that's doing, right? So if we're going to go down to the lower time frame, we're going to go ahead and do this. Let me go ahead and put my technicals back on here. All right. So I'm going to go ahead and clean up here. I'm going to clean up a lot of stuff here. And I'm going to break it down with you. And the only reason why I do this trade is because, you know, we talk about a lot of stuff here. There's a lot of stuff that we chat about in these different sessions. And so it just makes a lot more sense when we clean up and we revisit the conversation again. There we go. All right, so here we go. So we came off support right here. We're going to focus in on, all right, we're going to focus in on this. This is important because if you look at the market, if any trader looks at the market right now, this is what they've seen. They've seen downward channel right here, and they say this is heading south. All right, we're in a downward channel, we're heading south, and listen, they're completely right. Right, this is a downward channel, but you got to look at the bigger picture, right? You got to take everything into context. And if you take everything into context, we saw that there was an upward swing, and this was a correction move. So this downward trend that we're seeing right now is a corrective downward trend, but it's not a impulsive move. So which means it's not a trend move. It's an impulsive. It's coming off an impulsive move, so it's in a correction move. And so what we're going to do here is we're going to take a look at the inside swings. And so this is the inside swings right here. I'm going to look at this saying that if this is going to be, and this is how I'll break it down, if this is going to be an A, B, C move right here, then the B to C move has to be in a 5-wave structure. It has to. That's what it does. So when the market comes to this resistance, the question here is price going to break through there, or are we going to see a dip down south? And if we're going to see a dip, how far can the dip take place? Well, this is what I'm going to do. I'm going to go to this inside swing here, and I'm going to mark it down right here. Right? Now, if you look at this, look at the 1.618. We came right to the 1.618, and price has gone ahead and rallied back up. So I'm going to put that in right there. So I'm going to mark this off as my wave 1, wave 2, wave 3 right here. And so this is a wave 4 right at resistance. And now we're looking for price to come back down a little bit deeper before rallying off. So it tells me that there's a good chance that the New Zealand CAD is going to rally, but only after it comes back down to this level, which means that we're going to expect price to test this level again and then go ahead and rally. Let's put that in again. And so if you look at the daily right here, you can see that we're in an overbought condition. We're at resistance right here. We're at resistance right here. Right, there it is. We're at resistance there. And therefore, this is a good place to start thinking about price action move, bearish, towards this level, which gives us about a, let's see here, about a 389 pip dip. So we're looking for about a 389 pip dip down here to come back to retest this level right here. And that price level, if you want to write it down, is at 81.83. So 0.8183 is the downward target. All right. And we've got a lot of confirmation right here. Now, we just had US oil. We just had a rate decision. Rates were raised up 25 basis points. That's going to create some strength in the Canadian dollar. We haven't seen that, even though oil prices have been rallying, and that normally is the case when oil prices rally, Canadian rally. We have not seen that. But now we're starting to see it. Is that the turning point for the Canadian dollar? Is that what's going to create some strength in the move that we were looking for on Aussie CAD and New Zealand CAD, bearish? Could this be the move? But the only thing that we need to pay attention to right now, traders, is this low right here. As long as price stays below 86.16, then we would be thinking bearish right here. We'd be thinking bearish. And we'd be thinking bearish all the way back down to the level right here, the support level at 81.83. Does it make sense? Does it make sense? Top up in the chat right here if that makes sense to everyone. Top of the chat. Hey, if it doesn't make sense to you, that's okay. I had a trader last week that posted on the A1 Trading comment there saying he does not agree with my gold analysis, and that's okay. That's the beauty of this market, is that everyone has got their own perspective, but at the end of the day, the market will tell you exactly whether you're right or wrong. And have I been wrong before in the past? Absolutely. Everyone's been wrong at some point. And that's why we always have what we call the alternative, right? If that doesn't work out, we look at the alternative. Because why do we look at alternatives? Because the market waves. Whether it's waving up or waving down, it waves. And if you find a wave or a structure that you're trading that is bullish, and the market takes out that structure, guess what? there's an alternative, and the alternative is now we have downward swings. So there's always going to be alternative. That's the beauty of trading this market, is that if we're wrong, we do have an alternative that we can be back on. We can get back on track again. So let's jump into a couple of things right here. So let's see here. All right. So we got one person agreeing. Fantastic. One person out of everyone in this room, only one person agrees with me. Can I be that wrong? All right. All right. Maybe we're going to get some more yeses on this one. All right. Let's take a look and see what's going on here. So let's take a look at gold, because that was the conversation last week. Let's take a look and see what's going on with gold. And so what did we say last week? Well, we said this. We said in the session, we said that we're expecting price to go up to this level right here. Let me go ahead and mark it off. There it is there. So this is the level right here. I'm going to go ahead and mark it off right here. All right, good. We actually got a bunch of agreements. Okay, good. I'm getting a lot more people saying I agree. All right, fantastic. Good. All right, so here we go. So price, we said that price last week when we spoke about gold, there was a lot of concern. Where's gold going to? What's gold going to do? And we said gold is going to go to 1,939. It went further than that. Now, when I call a price again, let me just say once again, support and resistance is not a defined price; it's an area, right? So when I say 1939, it doesn't necessarily. It will just go straight to that number and then drop. It's going to go to that resistance and then drop. So resistance could be an area. Now we did go to that level. We actually went higher. Now, if I look at the target to the upside past that level, now let me just show you what I'm looking at right here. I know there's a lot of stuff on my chart right here, so let me just see if I can clean it up a little bit. Yeah. So, and I'm going to take out these buys that we placed in here. Let's take out that buy and that buy. I'm going to take out a lot of stuff here. All right, this is cleaning up, doing some housekeeping here. All right, cool. All right. So let's start off with this swing coming up right here. Here we have a swing. This is the swing target that we're looking at right here. There was that 1939 area right here. All right. It's right here. So we were looking at this to be our wave 1, wave 2. And traders, you can see that all my information that I share with everyone has got valid reason why I'm doing this. Okay. But now we got wave 1, wave 2. Now this is where it comes. This is where the exciting part comes in right here, because the market has waves within waves within waves, right? Okay. So when we look at this, this was going to be my third wave target right here, and price did hit there. But then look at inside here. We had an inside swing, and the market created this wave 1 inside wave 1. Then we had a wave 2 right here inside wave 2. Then look where price rallied up to. Price rallied up all the way to my third wave target right here. Boom, done. And so this is telling me that we don't have a wave, large wave 3 here. We have an inside wave 3. And then we're going to see a pullback. Now, we may still see some more sell-off on gold. I think gold's going to sell off a little bit more. We haven't had a proper correction move. I think we're going to see a little bit more of a sell-off on gold. And it's going to give us a nice little U-turn right here. And we're probably going to see that U-turn right here around about 1877. And then we're going to see another rally. And that rally is going to go to our fifth wave. I'll show you where that fifth wave is in a minute. All right, I'll tell you what that price is going to be at. We're going to see an inside fifth wave right here. Okay. Inside fifth wave. There's the fourth wave right here. We're going to see an inside fifth wave. Then we're going to complete our large third wave. Then we're going to see another dip down here, which will be our fourth wave, large fourth wave. And then we'll see another rally to give us another fifth wave. So listen here, traders, are we done with gold rally? No, we're not. Gold is going to continue to rally, but we're going to get these dips. So those traders that are looking to get in on gold, be patient. Don't look at this and say, I'm never going to get in on this trade. Because what's going to happen is you're going to get in and then it's going to drop and you go, oh, I should have waited. You know, it always happens. So make sure that you are waiting and patient and getting in on the dips. And if you did not get in when we spoke about 1720, 1730, down below there when the market was creating these moves, if you didn't get in there and you're looking to get into gold, be patient and wait for gold to correct itself. There is going to be correction. All right. There is going to be correction. So let's take a look and see what that looks like. So I'm going to put in an inside swing right here. And I'm going to mark it off right there. And I'm going to say that our fifth wave right here is going to be priced at 2032. So gold is going to dip. Look for a dip. Look for a dip in gold. And my buy level, I'm going to go ahead and mark it off right here. It's going to be around about, I'm going to give a range. I'm going to say 1890, 1870. So this is going to be the range right here. My buy range is going to be around about 18, let's go 1870 to 1819. Okay. That's the buy range right here. And the target on this, all right, we were expecting price to turn, is going to be right here at 2034. So I'm going to top up right here, target is at 2034. Right. So this is it. So if we're going to look to get into gold, we've got to wait for gold to dip. Once it dips, get into gold, look for it ready. But I want to go ahead and remind everyone, I'm going to plot it out here. This is our inside wave 1, 2, 3, 4, and 5. There it is there. All right. So we want that structure to play out. All right. Now, let's just go ahead and say this. If that structure fails, then we've got to look at the alternative. Right now, that structure is in place. It's holding. We'll see how that plays out over the course of the next week. Okay. All right. So that's it there. And then let's go ahead and take a quick look at got a trade right here. So please can we look at the pound JPY? Sure, we can go do that. And then I want to go to Bitcoin. And I want to close off with Bitcoin. So let's take a look here. Pound JPY. Let's see. Once again, if you go ahead and compress your charts on pound JPY, what do you see? You see range, right? Now you do see a big, large swing coming down from the left-hand side there, but you see the market's been range bound, and it's been range bound since, look at that, 2016. Are you kidding me? So since 2016, which means October 2016, and this was Brexit year. When we had Brexit taking place back in 2016, guess what happened? Price of the pound dropped, but then we had a bounce off that. We had another bounce. Then we, of course, had in 2018, we had, of course, Brexit come back again. It's got alive again, drop back down again. In 2020, we had we had trade wars. We had trade wars with China. We saw some rally. We had Brexit also coming back again, back alive again, and we saw some nice rally back up again. Now, we tops. Traders, it's that simple, all right? Do not have to complicate it. You don't have to be, this experienced trader to be able to identify that if the market's at resistance, sell resistance. Market's at support, buy support. If the market breaks resistance, stop selling and look to reverse your position and start buying again. That's simple, right? So here, if we look at JPY is at resistance, okay? And so we're selling pound JPY. When I say we, I mean me and my teams. We are selling pound JPY. And we're selling pound JPY because we're looking for pound JPY to drop and to fulfill this downward swing right here, down to this level right here at around about 143.27. So we are in a bit of range. I mean, I'm not oblivious to this. I can see we do see a lot of support right here, which means that this inside swings that I'm seeing right here, it's something that I need to pay attention to. And hold on a second. I just realized we've taken out that swing high, so let's kill that. So this is not important anymore. Right. So we've got double tops right here. All right. So if we've got double tops, let's go ahead and mark it off. Here it is. We've got double tops. We've got a bottom right here. Price bearish. All right, guys, looks like we're back up again. All right, hold on. Looks like we're back again. Just go ahead and type up in the room right now if you're back. It looks like we lost a bit of connection here. We're back up again. Just go ahead and type in the room if you can hear. I want to make sure that we're all good to go right here. Okay, looks like we are. Okay, we're good. Okay, good. Thank you. All right, so coming back to what we were discussing right here before we had that little snippet of the short break. Let's take a look at the pound JPY again. Now, pound JPY, the reason why you don't want to just sell based on pound JPY directional bias is because at the moment right now we've got some short-term support right here, and so if you look over here, here is the support right here. Now, that just means that price is going to bounce. So it means we've got double tops, we've got double bottoms. If we break out of the bottoms right here, price is going to break down further down south, which means that if we break the support level, we should go down to this level right here, which is about 380 pips, and then down all the way down here, which is about 965 pips. So there's big downside potential down here. We just got to pick our entries. We've got to pick our trades really good right here, because of the fact that the market's at the support level. So what you want to do is you want to go down to the 1 hour time frame. This is the 1 hour right here, and you want to validate why we've seen the support level hold and where could the market go. So pay a lot of attention to what I'm going to tell you right now. Okay, look at this right here on the 1 hour. On the 1 hour, we have a wave 1 down here. What does it do? It goes down to the 1.618. We have a wave 2 down here. Oh, sorry, wave 3. So we're looking at this inside structure right here, giving us a wave 1, 2, 3, 4, and now we're looking at 5 down here. So this is what's going to happen. Price is going to try and get down to that level. Because we are above this level right now, because we're above that level, there's a good chance that we're going to see a rally on pound JPY first before we actually go ahead and sell off, which means this. We're going to see the market rally back up to this level right here, which is priced at a little bit above 155. So let's call it 155.25. So looking for a 155.25 pip rally right here. All right, so 155.25 rally. So that's about 200, maybe 150 pips or so. We're going to see a rally to that level. And then when we get to this level, we're going to see price turn around and head back down to this level right here at around about 152.50. So 152 actually around about 152.40. Right there. So that's where we're going to see the market move. In fact, let me make sure that level's right. Yeah, 152.40. So we're looking at short-term rally or mid-term rally right here, or let's call it a short-term rally, and then a mid-term dip back down to 52.40, And then down here, we'll get another rally. Now, because we're breaking out of that range, all right, because we're breaking out of this range, there is this possibility that the market could extend itself past that level, all right? So watch out for this. If the market does go up here, take out that high, and then dip back down south again, and then go all the way down here, which is possible after we break through that support there, then we'll see another rally here. So which means that this is going to be an inside wave structure right here. So we'll have this as an inside structure, 1, 2, 3, 4, and 5. So we'll look at the alternative if it happens. But right now, what we're going to do is we're going to bank on a continuation of a rally on pound JPY towards that 155.15 level. So 155.15, 155.20, right about there. We look for the market go ahead and rally to that level there. Okay. Traders, one more thing before we leave. Bitcoin. What's going on with Bitcoin? All right, here it is here. Take a look right here. I'm paying attention. I'm paying very strong attention to this upward swing right here. I'm looking for Bitcoin to rally up to around about 53,800. All right, so Bitcoin's going to go up to 53,800. Write that down. When we get to 53,800, either we're going to blow through this because we've got a lot of adoption to Bitcoin. Either we're going to blow through that and have an extended a lot higher, which will be great. Then that 53,800 level, 53,800 level, will then become support for the market as it trades towards its next level. So firstly, number one, let's see what the market does at 53,800. Call it 54,000. Okay, if we can get to 54,000 and see what it does at 54,000, we're going to be able to take. We'll have to make a decision from that point onwards. Am I going to take profit off Bitcoin? No, never. I'm not. I'm holding Bitcoin for a much longer period. But for short-term traders right now, look at the inside swings. Inside swings, we're struggling to break above 45,000 right here. Okay, so which means because we're struggling to break below above 45,000, there is a chance that we may come back down to about 42,000. All right, 42,000, maybe 41,000, 41,800, 41,900, round about there. We're going to come back here, and then we're going to bounce back up again. The deepest correction move I expect would be about 40,000. But I think we may bounce off that 41,800 to 41,900 level. So buying on the dips would be a good way to go ahead and get back into Bitcoin, but wait for it to go ahead. What's nice about Bitcoin right now is that we are starting to see these nice corrective moves that traders can now go ahead and start looking to invest in. But also, more importantly, we're starting to see some uptrend on Bitcoin, and we've broken through that 40,000 support level that's been holding for so long before we broke below that down to 32,000. So we're back above there, which gives us and puts us in the buying seat right now. It's definitely a bullish market. Now we're back in the bullish trend on Bitcoin. So we just got to buy on those dips. All right, traders. Well, that's about it for right now. Hopefully you guys learned a little bit from what we spoke about today, picked up some tips on some trade opportunities. Once again, traders, make sure that you do your own research before placing trades. Make sure that you follow your own strategies that you're comfortable with. Make sure that at all times you're using good equity management in your trades, especially if you're using multiple entry points. For traders, I'm the FX Big Dog, and I want to thank you for coming in today. Don't forget to go ahead and subscribe to the A1 Trading channel. Also, go to my channel, FX Big Dog Trading channel. Go ahead and subscribe to that channel as well, as both the A1 Trading and myself post regular videos, and you want to make sure that you get connected. Also, if you haven't smashed the like button, you may want to go ahead and do that right now. You've got a lot of great content today. Go ahead and smash the like button. Show your appreciation to the A1 Trading Group. Let them know that you guys appreciate what they're doing, and I think they're doing a fantastic job by getting great education out there. They're really connecting with good traders out there in the world and making sure that they bring that content to you. So smash the like button, go ahead and subscribe to the channel, and we'll see you next week. This is the FX Big Dog signing off.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. And remember to check the description below if you're looking for a new broker, trying to get funded, or looking for a trading community to join. From all of us at A1 Trading, have a great day, and we'll see you next time.